Have you ever noticed that the price of your favorite gadgets, groceries, or even a new car suddenly jumps overnight? Or maybe you've heard politicians arguing about tariffs but never really understood how they affect you. Tariffs are more than just an economic buzzword. They influence everything from the cost of everyday essentials to the stock market and even your retirement savings. In this episode, we'll break down what tariffs are, how they work, and why they matter to your finances. We'll explore real-life examples of tariffs that shaped entire economies, from historical trade wars to modern-day conflicts. We'll look at how they impact prices, businesses, and global trade, and what they mean for your investments. More importantly, we'll talk about strategies that can help you navigate a world where tariffs constantly shift the economic landscape. By the end of this video, you'll have a clear understanding of how tariffs affect your money and what you can do to stay ahead. So stay with us, because this is information that could directly impact your financial future. So what exactly is a tariff? In simple terms, a tariff is a tax a government places on goods or services imported from another country. It drives up the cost of those foreign items, making local products look more affordable and attractive by comparison. There are two main types of tariffs: protective and retaliatory. Protective tariffs defend domestic industries by making imported goods pricier, giving local businesses room to grow. Retaliatory tariffs, on the other hand, come into play when a country responds to tariffs imposed on its exports, like a back-and-forth economic face-off. Imagine you're eyeing a $500 smartphone from abroad. If your government slaps on a 20% tariff, you'll end up paying $600 instead. The extra $100 heads straight to government revenue, and suddenly local smartphone makers get a competitive edge. Advantages, disadvantages, and economic impact. Tariffs can serve up both pros and cons. On the plus side, tariffs protect local jobs and can spur businesses to hire domestically, sometimes reducing dependence on foreign goods, like key medical supplies or energy resources. However, there's a flip side. Because tariffs push up the cost of imports, consumers end up paying more at the store. Tariffs can also ignite trade wars, where countries retaliate by piling on more tariffs, slowing global trade and hurting exporters whose items become more expensive overseas. Historical examples and lessons learned. History provides useful examples of how tariffs play out. One famous case is the Smoot-Hawley Tariff of 1930 in the United States. Designed to safeguard American jobs, it backfired when other nations fired back with their own tariffs, helping deepen the Great Depression by severely disrupting global trade. A more recent scenario is the US-China trade war from 2018 to 2020. Both sides' tariffs drove up prices in everything from agriculture to electronics, rattling global supply chains. Meanwhile, Japan in the 1960s to 1980s took a different approach. Tariffs on imported cars helped its domestic auto industry soar, turning Toyota and Honda into worldwide powerhouses. How tariffs affect people and investors. Tariffs hit your wallet directly. If a tariff on steel or aluminum is introduced, anything from cars to soda cans can jump in price. Investors notice these changes too. When tariffs rise, the stock market often reacts negatively, especially if global trade flows slow down. Industries relying heavily on foreign parts or overseas customers, like tech, agriculture, or automakers, are often hit the hardest. On top of that, tariffs complicate international supply chains, raising operational costs for businesses everywhere. This volatility can cut into investment returns or simply create more uncertainty for everyday investors. Investor tips and success stories. Astute investors can still come out ahead in a tariff-heavy landscape. During the US-China trade war, for instance, those who shifted their focus to domestic-oriented companies, like healthcare or utilities, often saw steadier portfolio performance. Notably, Warren Buffett profited by investing in brands with strong American roots, like Coca-Cola, that stayed relatively unscathed by trade fights. Other investors found refuge in gold and bonds, which can serve as safe havens when tariff tensions heat up. Conclusion and investment strategies. Understanding tariffs is essential in our globally connected economy. As an investor, staying current on tariff developments can help you handle market swings more effectively. Think about diversifying your portfolio and considering sectors less influenced by trade disputes, like local utilities or healthcare. Above all, stay tuned to global economic news, Staying informed is half the battle in today's complex financial world. Welcome back to AI Finance Buddy, your friendly guide to mastering personal finance. We strive to make finance simple, fun, and accessible. Whether you're saving for something special, keeping up with the latest market trends, or looking for savvy ways to make your money work for you, expect straightforward financial news, practical budgeting advice, and easy-to-follow trading tips. Plus, we're big on financial education, quick lessons and real-world examples to show you how money really functions. We also have a real-life success story in every episode so you can see how others achieved financial freedom. Don't forget to subscribe and turn on notifications so you never miss the latest financial insights.